Today on RoxomTV News, Malaysia and Indonesia slam the brakes on Elon Musk's Grok, plus unrest in Iran keeps spreading as the regime digs in. But first, the Justice Department subpoenas the Federal Reserve because nothing says market stability like turning monetary policy into a courtroom drama. All that and more coming up on today's show. Let's get into it. Happy Monday, everyone, and welcome back to another week here at RoxomTV News. I am Hank Hudson. Now, the U.S. Justice Department has issued grand jury subpoenas to the Federal Reserve, asking for information connected to testimony given last June by Federal Reserve Chair Jerome Powell. Now, the official focus is a long-running renovation of the Fed's Washington headquarters, a project that's grown from an original estimate of about $1.9 billion to roughly $2.5 billion. But the response from Powell makes it clear this is not being treated as a routine construction review. You see, over the weekend, Powell took the unusual step of responding publicly and directly, releasing a video statement that struck a far more combative tone than we're used to hearing from the normally restrained central banker. Let's take a look.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
Now, in that statement, Powell suggested the investigation should be viewed less as a good faith inquiry and more of a form of pressure. He warned that the threat of criminal scrutiny appears tied not to renovation spending, but to the Federal Reserve's refusal to cut interest rates as aggressively as Donald Trump has publicly demanded. That is an extraordinary accusation. You see, Powell went on to say that the subpoenas amount to an attempt to intimidate the central bank into aligning monetary policy with White House preferences, something he warned cuts directly against the idea of an independent Federal Reserve. Now, this tension has been building for years now. Trump has repeatedly criticized Powell for keeping borrowing costs high, blamed the Fed for slowing economic growth, and openly floated the idea of firing him despite having appointed Powell during his first term. He has also tried to remove another Fed governor, Lisa Cook, on unrelated grounds, signaling a broader willingness to challenge the institution itself. Now, on Sunday, Trump denied any knowledge of the Justice Department's actions. Here's that very moment.
In a phone interview with NBC News Sunday night, President Trump denied having any knowledge of an investigation or that he would use one to pressure Powell. Quote, "No, I wouldn't even think of doing it that way," the president told me. What should pressure him is the fact that rates are far too high. That's the only pressure he's got.
Still, reporting from Reuters and Bloomberg suggests that this pressure campaign isn't accidental or isolated. As Powell's term as chair approaches its May expiration, administration allies have openly discussed ways to weaken his authority and reshape the Fed's leadership. Now, behind the scenes, Bloomberg reports that Bill Pulte, the head of the Federal Housing Finance Agency and a vocal Powell critic, played a significant role in pushing for the subpoenas. That has raised alarms, including within Trump's own party. Republican Senator Tom Tillis, a senior member of the Senate Banking Committee, warned that using the Justice Department to pressure the Fed could destabilize bond markets and create unintended consequences. Now, Tillis has gone so far as to say he will block any Federal Reserve is resolved. Now, the Justice Department, for its part, has declined to comment, saying the only thing that it is reviewing is potential misuse of taxpayer funds. Legal experts note that Fed chair can be removed only for typically misconduct, not distinct policy. Powell's term as chair ends in May, but his seat as a Fed governor runs through 2020. He plans to continue doing his job with integrity. And markets were quick to pick up on the significance of all of this. See, firm this its largest in 3 weeks. Investors read it as a challenge to the Fed's independence, and even of political interference is enough to rattle confidence in the dollar, long-standing institutional backing. Now, at the same time, investors toward traditional safe havens. Gold and silver surged to record highs, with gold toward $40 and analysts describe the move not as they call institutional, essentially a hedge against uncertainty about who ultimately controls monetary policy. Bloomberg also provide cautious talk a sell America trade.
Do you sell America on Fed independence risks?
I think so, because ideally what you want to own is international assets. We do believe that in this environment it is quite difficult and challenging for the US dollar. As a consequence, it could weigh negatively on US equities, particularly if you're an international investor. So that is one thing to bear in mind. But also, if we have a broadening out, that's an environment where you see better growth. We do think earnings growth will be better, so that makes other markets interesting.
So far, measures, but strategists warn that sustained pressure on the Fed eventually push people away from U.S. toward hard or non-U.S. markets. That shift is already visible. Copper moved toward record highs, a weaker dollar and expectations. Notable here is how quickly resistance on both sides of DOJ. Tillis says the probe raises serious questions about whether the administration is attempting to intimidate the central bank into cutting rates. Now, because the Senate Banking Committee is narrowly divided, his opposition alone could effectively freeze confirmation of a new Fed chair or other governors. Bloomberg reports that Democrats are signaling they will oppose Fed nominations as long as the investigation hangs over Powell. Now, the question here is prosecuting Powell a good idea? Well, from a market perspective, most analysts say no. In a Bloomberg opinion column, John Authors argues that even if Powell made policy mistakes during the pandemic, those do not justify criminal prosecution on unrelated grounds. More importantly, the threat itself creates a problem. You see, once investors believe future Fed decisions could be shaped by fear of legal retaliation rather than economic data, trust erodes pretty quickly. Now, that perception helps explain why money flowed into gold and away from the dollar almost immediately after the news of the subpoenas broke. Now, Authors argues that prosecuting Powell would likely fail in court, damage U.S. credibility abroad, and weaken trust in the Fed at home, all without meaningfully lowering inflation or borrowing costs. Now, the entire dispute traces back to a renovation of the Fed's historic headquarters complex, made up of buildings constructed back in 1930 and 1951. Now, the cost increase, according to Fed officials, reflects higher labor and material prices, asbestos and lead remediation, and design changes required to preserve the building's historic character. Plans to renovate a third building were scrapped entirely, cutting more than $500 million from projected costs. Now, Trump and his allies have portrayed the project as being extravagant. The Fed disputes that claim, denying claims of VIP dining rooms, private elevators, or rooftop gardens. Oversight does very much exist here. The Fed's Office of Inspector General receives monthly reports and conducted a formal review in 2021. A new review is now underway. Now, analysts say the distinction here matters because scrutinizing costs is one thing, criminalizing policy agreements is another. So, I want to give you my read on this situation here really quick, because here's the thing. This story isn't really about a renovation, right? It's about whether monetary policy is allowed to exist without political supervision. Markets can survive bad decisions. What they struggle with is uncertainty about who's actually calling the shots. You see, once investors start believing interest rates depend on loyalty instead of data, everything gets repriced. We're talking currencies, bonds, and risk itself. And if the goal was lower borrowing costs, this is a strange way to go about it. You don't claim markets by threatening, or you don't calm markets by threatening institutions, and you don't lower rates by subpoenaing credibility. And you don't strengthen trust by turning disagreement into prosecution. This isn't a legal drama, it's a stress test. And right now, the system isn't breaking, but it's paying very, very close attention. All right, joining us to talk about this story and others on this Monday, we have one of our best friends of the program, the man himself, Stephen Big Beat Orr. Stephen, happy Monday. Thank you for joining us. How are you?
Hey, Hank, how are you, man? Thanks for having me on the day. You're absolutely right. Look, this story is breaking over the weekend, and there is nothing that the markets want more than clarity. And this is not a good way to start the week, right? I mean, when you talk about the Fed in general, it is separated for a very good reason, that they need to be making decisions based on data and not based on what the president or what Congress thinks or what an ambassador thinks or even what you and I think, right? They should take all that in stride. And look, Hank, a day doesn't go by that I don't criticize the White House, the administration, or the Fed itself. And that's okay. And the Fed understands that. They need to take that in stride and say, look, the American people think this, the president thinks this, Congress thinks this, and understand that. But Powell is right. It should be data dependent. Now, whether or not that data is correct, we don't know. We've had problems with that. You see what happens when clarity is not a part of this situation, and all of a sudden we have a much bigger picture. We started to see the new narrative running around. Sell America. Look at the bond market right now. The number of bonds that are being sold, treasuries being sold by foreign countries, is at an all-time high. Why? Because we don't have that clarity. We have a White House who thinks that they need to be able to dictate and mandate to the Fed how rates should be. They should be listening. They should be understanding what the Fed wants. They should be understanding what the president wants. They should be understanding what Congress wants. But that is not a way of demonizing the Fed and not a way of weaponizing the DOJ. This was exactly the thing that the president chewed Biden out about you're weaponizing the military, you're weaponizing the DOJ, you're weaponizing Congress against me and my people. So now he's doing the exact same thing that he has complained about, and is actually doing it on a much bigger scale. So no, I don't agree with this. And I've heard this both from Republicans and Democrats saying this is absolutely asinine, what's happening there. So no, the clarity here is very bad, and the president needs to step back and step out of it and let the OIG make a decision. The Office of Independent Counsel is a big deal here, right? We got to understand what they're thinking too. But no, the DOJ should not be prosecuting over what? Cost overruns? Are you talking about the Fed? Or are you talking about the ballroom attached to the White House? Both of them have overruns on both of their systems. So look, this is nonsense. And the president is definitely in the wrong. And I've heard this from a lot of Republicans saying this. And now you're hearing the new narrative, sell America. We do not need to see this. And I'll bash the White House over this. This is not a good thing. I've actually heard a lot of MAGAs are also saying the same thing. right? You need to make sure that we have good clarity from the White House, understanding and not being interfering of the Federal Reserve. This is the banking system in general. You cannot have interference on this level. Definitely tell them what you think. Say what you mean. But this is not a personal situation. You need to separate the two things. This is just a disgraceful position.
Yeah, absolutely. And Powell is not going quietly into the night with this, as he essentially argued that legal pressure is being used as leverage to influence interest rate policy. And from a market perspective, Stephen, how dangerous is it if rate setting appears to be negotiable under political pressure?
Well, we've actually already just set precedents, and that's important, right? Where the president is putting that much pressure into almost weaponizing the DOJ for what? For cost overruns that he had nothing to do with? This is absolutely asinine, and they're saying it because of comments that he made. When you have every past Federal Reserve chair, both sides of the aisle, saying the exact same thing, Powell's a good guy. When you have Scott Bessent saying Powell's a good guy. When you see Kevin Hassett, Powell's a good guy. Knock it off. This is not a place where the White House needs to be sticking their nose into it. And look, I support the president and the White House on a lot of measures here, but this is definitely one that they're in the wrong here, and they need to back off very quickly.
Yeah, and the markets reacted pretty instantly after this, as we saw the dollar slip and gold surge in the aftermath of this news. And in your view, Stephen, is that a temporary headline-driven move, or does it maybe suggest that investors are starting to price in longer-term credibility problems for U.S. monetary policy? What's your big beat on this one?
Well, I think the question mark is, what's the president trying to get to, right? Is he trying to really get to the point of lowering rates, and this is his tactic of doing it? We see chaos around the world, right? With Venezuela now, possibly Cuba coming up. We have been talking about it on your show over the last 4 or 5 months, and here we are. I warned about these kind of things happening, and now we've hit it, right? The problem that the president is seeing is that he sees the midterms. He is in trouble. He knows it. I've talked to several people in the administration, several people in the White House. They've all said the same thing. Yeah, we're going to lose the midterms, and we know it, and the president knows it. So he's moving as fast as he can, making as many decisions as he possibly can to make to his determination. And I don't blame him for the White House for doing this. He's playing politics and he's making decisions based on how he usually does it. But when we look at this as individual investors, as institutional investors, and as people that are thinking about outside of the United States as investors, this is not showing me what I need to see. I need to show a very positive Federal Reserve. I need to show a very positive White House and administration all rolling in the same direction. And the White House is not seeing that. The White House is saying, okay, the Fed's against me. Why? Well, Powell says it's data dependent. Well, okay. The problem is we don't have clear data, right? Over the last 3 months, the job numbers have not been clear. CPI data hasn't been clear. We're catching up, but now we have a credibility problem on so many sides. It's not an issue, and that's a problem. And this chaos is being created is not a good position. We have a very dear friend on our show too, right? Steve Flanagan, former head of the JP Morgan Forex desk, saying the exact same thing. I don't even like this. And he's a Republican, saying the exact same thing.
Right.
This nonsense has to stop. Here's the bigger picture problem. Now you got federal governments that are now saying, okay, well, this is starting to become an uninvestable place. And now we're seeing the narrative of Sell America starting to pick up pace. This is a really bad thing. It's affecting the dollar, as you said earlier. The Dixie does not need this. If you want to lower the dollar, we can do other ways of doing it, but not through the bully pulpit of the White House and not through a pretty good guy, Chairman Powell. If you don't like the guy, you don't want him as chairman, replace him. You do have the right to do that. I don't like how it's done, and that politicizes the White House too, and it politicizes the position. But if you don't like it, you don't demonize the guy. You don't throw him under the bus and try to trump up charges, pun intended. So look, in this situation, no, I don't like this. This is very bad for an independent Fed and for a White House that really can't get things done. You want to do it the right way, and I like that. The president has every right to replace Powell, and he should do that if he feels uncomfortable, right? So fine, but guess who picked Powell in the first place? Donald J. Trump.
Yeah.
So I'm not sure what's going on here. This is not a good precedent to set for next level next White House. So this is a very bad precedent.
It is, but this isn't the only place that Donald Trump is putting the pressure on right now, because that'll bring us to our next story here, because he's also turning up the pressure here in the United States on credit card companies. You see, Trump says that lenders would be in violation of the law if they failed to cap interest rates at 10% for 1 year. Now, he set January 20th as a deadline, but did not specify which law would make higher rates illegal. Now, the proposal follows last week's announcement of a voluntary 1-year cap framed as emergency relief for households facing high borrowing costs. There is no new legislation, no clear enforcement mechanism, and the plan relies on executive pressure and public scrutiny. Consumer advocates applaud the effort. Banking groups warn it could restrict credit access, especially for higher risk borrowers. Now, analysts note that credit card rates often exceed 20% because pricing reflects risks, funding costs, and existing state laws. A flat national cap would be legally complex and operationally pretty messy. So far, major card issuers have not committed to this, and Trump argues current rates are exploitative, especially as inflation cools. Critics say price controls could push lending into less regulated spaces. Now, for viewers at home, this is a familiar tension. Lower costs sound good, but markets still need rules, incentives, and enforcement clarity. Now, whether this becomes policy or pressure, it highlights how deeply interest rates shape daily life long before they ever show up in a headline. We're bringing Stephen back. Stephen, for people watching at home, a 10% cap on credit card interest sounds like immediate relief. In plain English, how would something like that actually work day to day for borrowers and lenders? What are your thoughts?
Hank, that's exactly right. I mean, for me, I think when Trump said this, I praised this absolutely. But he did it for a 1-year cap. So it's politicizing this too as well, right? I agree with this. Look, the thing I complained about over the last 3 years is the borrowing rate is too high, and we're already seeing banks giving credit to people who really don't need to credit in the first place, right? They've not shown good borrowing. They've not shown good ability to pay back that loan. And people don't really realize that your credit card is a loan. It is not a banking situation here. It's not a checking account. You got to pay it back. And when you pay it back, you pay it back at a higher rate. And that's how banks make their money, right? And when you look at it from that perspective, but 28, 30%, 22, sometimes, I mean, it can get really high, and the rates are different in different companies. This is definitely going to hurt. And guess what's going to happen? These banks, these credit card companies, JP Morgan, Citibank, you name them, they're going to get that money back in other ways. So you watch out. Fees are coming. But I do think the biggest problem we've had is that we are too far in debt. And when we look at personal debt is at the all-time high. And they're using that debt to fund their purchases of crypto and purchases of food. We know that there's a big imbalance here. That imbalance tells me two things. The first thing is telling me is that, look, the economy is not as good as everybody thinks it is. So this could be a relief package for those people. The second thing is, if it is for 1 year, you've got now another year to catch up. So I do like this. I praise the president on his ideas here. It just needs to be a little more fleshed out when we explaining how it's going to go about. Is it going to be automatic? Are banks just going to be told they have to do it? What's the time frame? There's a lot more than just saying things. You've got to be able to put a plan in place and be able to explain that to the American people. So I think we got a little bit of work to do here, but I do like the cap here, and I think it should be more than 1 year. I think it should be 2 or 3 years at the very least.
Yeah, it's certainly an interesting proposal, and Trump is justifying this by saying current rates are currently exploitative now that inflation has cooled. But it begs the question, Stephen, is this about fixing abusive pricing, or is it trying to paper over deeper problems in how consumer debt works here in the United States? What are your thoughts?
It's trying to get reelected and get the midterms for the Republican Party. Clearly, that's not what's happening, right? This is a very popular piece, and I do like it myself. And it's about the midterms. The midterms are not looking very good for the Republican Party. It's probably the worst since the 60s, and they know that. And so populist opinion pieces and planks are coming out very fast now. On the flip side of that, I do like the proposal. It's a very good proposal. Banks are very exploitive, and I think the president's making a very good, smart move here. But we need to see the deep, dark details before I make a bigger picture, thought process behind this. Just saying something doesn't make it happen. So let's see where we go with this. But when you tickle this with the Fed and you tickle this with the Congress, what's really happening behind the scenes? Are we realigning the banking system? Are we realigning the Fed? Are we realigning how the banks operate? Is the president of the United States now going to start mandating the rates from the bully pulpit? This is becoming a much bigger issue, and I think we need to wait and see. But I need to also wait and see on what the proposal actually is.
Yeah, I mean, right now, a lot of these moves, as you mentioned, do feel personally motivated by Trump to hopefully, they don't do better in the midterms. As I believe he said, if they don't win the midterms, he expects to be impeached again. So he certainly has a lot of his own motivations here. And from your perspective, Stephen, when governments try to control prices instead of addressing underlying monetary system issues, does that usually reduce pain, or does it maybe just move the damage somewhere else less visible? How do you see that playing out potentially?
Well, underlying themes here, you're right. I mean, when debt is crushing, I mean, the crushing debt of when you look at it from the consumer, it's really, really bothersome I heard today from several people saying, wow, look at the rates coming down on homes, but it's still not enough for me. I still can't afford a home. Home prices are up. So he's trying to alleviate some of those problems. And yeah, I like that a lot. But the underlying problem is that the consumer is spending too much. They're overspending what they really should be spending. And when they spend that money, it goes on the credit card debt, and the credit card debt needs to get paid off. So if you lower the rates on a credit card, they're just going to spend more. The problem is the banks don't have more to give them to lend. So this is a massive problem on both sides of this. So no, I think it is kicking the can down the road, pushing the problem aside. There's all kinds of problems. And it's also, hey, Epstein files. Hey, we got problems going on in Ukraine. Hey, we've got Japan. We've got China and Taiwan. Hey, we've got Greenland. We've got Cuba. We've got Venezuela. The geopolitical issues that we've talked about over the last 6 months have exacerbated. They've not gone away, and there's more now than there ever was. So, look, I think you're right. It's kicking the can down the road, and hey, look here, not here.
Yeah, no, those Epstein files, they kind of just seemingly disappeared. They were the talk of the world there for a couple of weeks, and we haven't heard much more than a peep about them since. So the timing is all very suspicious, but, it's the government for you. All right, we're going to move on to our next story here, Stephen, because in the United States, federal nutrition policy just took a sharp turn away from the snack aisle. The Trump administration has unveiled a redesigned U.S. food pyramid that prioritizes what officials are calling real food. Great, what have we been eating this whole time? Now, the new guidelines emphasize protein, healthy fats, fruits, vegetables, and whole grains, while directly warning Americans to avoid ultra-processed foods and refined carbohydrates. Now, for the first time, federal guidance formally recommends limiting ultra-processed foods, citing diabetes, heart disease, and Alzheimer's. It also calls an end to the war on healthy fats. Full-fat dairy is preferred over low-fat versions, and medical groups largely support the science. For viewers at home, this isn't just a diet update. It's a signal that the government is reframing food as a public health intervention, even if changing habits is harder than changing pyramids. And Stephen back. Stephen, for someone watching at home, what's the most meaningful change here? If you follow this new pyramid, what would actually look different on your plate tomorrow? What are you seeing from this big change here?
Not a damn thing. I'm not going to change my eating habits. I'm not going to change who I am. I do think this will affect schools. I do think this will affect, governments that are, sell food in the cafeterias of the White House and the State Department and government buildings like the Congress. This will change a little bit of that. Will it affect the cattle producers? No. I mean, we know as of a few years ago that Brazil passed up the United States. Is this going to help the farmers in the Midwest? No, because we know soybeans are not being sold in China nearly as much as they were. So yeah, there's a big problem here. And let me ask you, the average consumer is not looking at the new food pyramid and going, "Ooh, I'm going to change my eating habits. I'm not going to eat Fruit Loops anymore so that I can eat more grain cereal." They're just not going to do it, right? And that's okay. But it's not going to change the eating habits of just about anybody. I don't know about you, Hank, but I still like my Fruit Loops. I'm not going to change that. But I will say that it will affect some of the FDA proposals that are coming down the line. And that is going to be effective of maybe drug proposals. Maybe do we pass new drug laws? Do we look at the food systems that are coming into cafeterias into schools? Do we have to realign to that? And I think the answer is yes. I don't think you're going to see the crazy sliced pizza, square pizza with processed cheese on it. We might actually see real cheese now going into that pizza. So I'm excited about that. Maybe hot dogs no longer are what I think hot dogs are in the past. Maybe we'll get better hot dogs. I can tell you, I was just in the grocery store this weekend, and I can tell you that the aisle for cookies and chips were the least trafficked aisle in the grocery store, right? The most traffic now is probably the fruits and grains, vegetables, things of that nature, tomatoes, lemons. I saw people buying, non-processed meat now, actually going to the deli and actually asking for sliced meat. So people are thinking about food in a much better, healthier way. You're seeing these new drugs like Ozempic and Wegovy, and being in the pill format coming very soon, that are definitely changing eating habits. I was in several restaurants over the last few days, and I can tell you portions are smaller and the costs have gone up. And I'll tell you, there's some really good restaurants that are making that change too to non-processed food. No, we're not going to package it up and put it into a microwave and serve it to you anymore. They're actually going to serve it through a chef now. So that and actually will be changes. So there are going to be some good changes, some positive changes. But will it change the eating habits of the American people as they actually eat? Are they going to stop eating Doritos? No. Are they going to change their processed food and oatmeal? No. Are they going to stop eating Cheetos? No. Chester Cheetos will be just fine. Companies like Mondelez are going to do quite well. Now, one of the things that I did notice is that, and I like this for myself, is that when I looked at cookies aisles, okay, great. I'm not eating the 12 packs of cookies. Now I'm eating the single packs and it's a lot smaller. So packaging companies will do a lot better. There'll be a lot more cookies and a lot more Doritos in that bag. And so that's a lot healthier situation. But no, the eating habits of the American people are not going to change overnight. And it's definitely not going to change because there is a new food pyramid. So that in and of itself, I don't think will change.
Yeah, I don't think anyone's going to be changing because there's a new food pyramid and everyone's going to be posting it on their refrigerator being like, this is how we have to eat now, because nobody was paying attention to that to begin with. In fact, if you look, there was a South Park episode about 10 years ago where they joked about literally flipping the food pyramid, and that's exactly what happened here. South Park always ahead of the game with that one. But I am excited about it for school lunches. You have a lot of kids who are kind of doing on like a paid lunch by the government and might not be getting good nutritional value at home, so hopefully it helps for that. I think it's a good thing, but like you said, I don't see people changing their habits drastically because the new food pyramid told them to, but we'll see how it goes. And the federal government is now also openly warning people to stay away from ultra-processed foods and added sugar, which is good. But why do you think it took decades for official guidance to catch up to what many doctors have been saying for years? Why did this take so long, Big Beat?
Money. Influence. These companies have lots of labor and PACs that are spending big money on these members of Congress and the FDA, and saying, "Hey, look, leave my Nabisco alone, leave my Mondelez alone, leave my cookies and my foodstuffs and my processed foods." One of the things that's interesting is it's a big burden on grocery stores. Why is that? Because when you have processed food, it lasts longer, right? So people are buying in bulk because they know that processed food lasts longer in their refrigerator or in their quote closet for food, and they can forget about it, right? Oh, and then they forget about it, and then the date passes, and then they have to go to the grocery store and they have to buy more. I'm already seeing that now, right? An apple, when it comes off the tree, shouldn't last more than a true hour or two, right? It should already start to
Hmm.
decay. But with processed food and sticking all the GMOs and everything else that goes into it keeps that food longer, shelf life longer. That's what they do. So and guess what? We're eating that. So well done to the FDA for that. But the FDA can be blamed for a lot of other things. This new FDA with these new drugs and vaccine issues for me is a big problem because vaccines are good
Hmm.
for the American people, and we've had them for 50 years, and we don't have problems. And all of a sudden now we have more measles, more mumps, more flu. No,
Yeah.
get those, get that vaccine. I don't care what people think of me when I say vaccine. Vaccinate, folks. I mean, it saved this country several times. Just ask people that on polio. We don't have polio anymore or smallpox.
Right.
So when you look at the
Yeah.
FDA, is the FDA going in the right direction? And I think this is actually a very good point that they've done. Look, food needs to be real. It needs to be from the vine, and I do like this. So this is a good move on the FDA.
Yeah, in principle, I think this is a good move. I totally agree with you. But on the show, we've often talked about incentives and how those shape behavior. So my question is, when industrial food systems typically reward cheap sugar and processing, do you think guidelines alone can really change outcomes here, or is this a fool's errand?
No, they can actually change because, quite frankly, they make the FDA. Now, the problem with the FDA is they've got rid of a lot of their enforcement. So then people that enforce those rules are no longer around to actually enforce the new rules. This administration got rid of several people to enforcement. And so that's a problem. Now, they make new rules. There's no one to enforce those rules. If they enforced the rules and said, look, you no longer can put processed food and just jam a lot of sugar into it, pun intended, that is a problem. So I know. I
Right.
think that there could be some changes here, but enforcement is always the issue.
Yeah, well, we'll see if we can get some ice level enforcement on foods, and we're all going to be eating really good soon. At a deeper level, though, Big Beat, does this feel like another moment where institutions are admitting that they've done long term harm, but are kind of struggling to unwind the very systems that created it?
Yes and yes. I mean, we have gone that direction where we need to sell more things. The consumer mercantilism isms that we talked about, capitalism, it's exactly right. Make more money, stock price goes up. It's a never-ending cycle, and that cycle I think is about to be broken with this new FDA pyramid. Now, again, if you're not enforcing the rules and the FDA is not making these companies do it, then there's a problem here. So, but I think they've gone the right direction to start the process. Let's see if they can't make it stick. And I think that's the question mark we have to ask.
Yeah, absolutely. We're always wondering, you can put those laws in place or you can say certain things, but will you actually put them to practice? That remains to be seen. And that kind of leads us to our next story here that's actually unfolding over in Southeast Asia, where governments are moving fast to rein in AI. You see, Malaysia and Indonesia have blocked access to Elon Musk's AI chatbot Grok over concerns it was being used to generate non-consensual sexual content. Now, regulators in both countries say Grok's image generation tools made it too easy to create explicit deepfakes, including content involving minors. The crackdown has triggered wider international scrutiny. The UK-based Internet Watch Foundation said it identified criminal images of children between 11 and 13 years old that appeared to be generated using Grok. X's AI says it has limited image generation tools to paying users, but regulators argue that safeguard just isn't enough. Some U.S. lawmakers are now urging app stores to suspend Grok entirely until stronger protections are put in place. Now, why this matters at home is pretty simple. Governments are no longer debating whether AI can cause harm. They are acting on that assumption that it already is. And the speed of these bans suggests the next phase of AI regulation may arrive far faster than Silicon Valley expected. We're bringing Stephen back. Stephen, for viewers who don't follow AI closely, what specifically crossed the line here that led governments to block Grok outright instead of issuing warnings or fines?
One of the key things about AI is that no one really has cornered the market on AI. Several different AIs are doing several different things, Anthropic and Claude and Gemini, which now is partnered with Apple. You can see that there's this huge fight over what AI is going to win. And all of these AI companies are really trying to push the boundary of what their AI can do. And the problem is with doing that, there are some problems that happen along the way. They're breaking the mold, and that breaking the mold means that we have these kind of issues. And guess what? people out there are going to do everything they can to break the machine, or they're going to try to push the limit themselves. And this is a never-ending cycle again. Now, in this situation, Grok has definitely not had any guardrails. And we've talked about this on the show several times, that AI needs guardrails. And this is one of those guardrails that need to happen. Are you talking about people trying to find sexual pictures on the internet? It's just going to happen. I'm sorry. Porn is what started everything with the internet, right?
Yeah.
So, yes, but countries that are Malaysia and Indonesia, and Islamic countries, and countries that are very religious are going to find ways of blocking this type of AI, and they just started the process here, right? We're already seeing countries like Australia talking about blocking AI as well, and blocking X. But we know one thing is a factual, that we've, as Warren Buffett said it yesterday on AI, we've let the cat out of the bag. You can't put it back in. And guess what? They're not going to stop. So we've got to fix it and move on. And that's okay. That's how we fix things, all right? We find problems and just fix it and move on. So no, I don't think this is a problem. I think this will go away. I think Malaysia and Indonesia will take the block off once these things are fixed. Now, I'll tell you, over the weekend, I spent a lot of time with Grok trying to understand the deep darks about Grok that people don't normally see. I have access to Grok that most people don't have access, right, with the AI. And the ability to create pictures and video through Grok is very good. There's a lot of video of me and the A-Team and video of me with Jimmy Buffett, right? And because of that, look, Grok has done a very good job. And people are going to push that envelope, and they've done that. And people don't want to see their voice that are celebrities being used in a malicious way. I found ways of making the Trump saying things that he probably shouldn't be saying, right? And I wanted to push the envelope. And so when those things got out with other people, you saw that was a problem. And so these countries, instead of trying to talk to Elon, saying, Elon, look, you need to fix this problem, they went ahead and did what they normally do. It's ban first and ask questions later. And that's what's happened in this case. So AI in general is not going to stop. It's only growing. The speed of which you just saw Meta making deals. You saw Google Gemini making a deal with Apple. This is a very smart move. So no, I don't think that Grok, and Grok is very good. People who don't know, Grok is very good. Is it the best? No, not even by a mile, right? Is Claude the best? Is Gemini the best? No, not even by a mile. But we are getting better. AI is growing so fast and moving so fast. I saw Kathy Woods over the week, and talking to Kathy about it, she said very simply, we no longer live by Moore's law. Moore's law saying that that the tech doubles every year, and we're seeing rights law being applied here, especially in AI. And so I think she's right. I think we're moving very fast in AI, and probably I think rights law will probably go away, and some other law will come in, because the speed of technology, because of energies coming online faster, because of the technology, and because of these data centers are exploding. Look at CoreWeave stock today, up another 8% today. Why? Because these data centers are being built. And so no, I think the block from Malaysia and Indonesia will go away probably within the month, probably not even take that long, as Grok fixes their problems. And look, if I think about it from the perspective of making video, Grok does a very good job. It takes these pictures and adds their flair to it. But I'm not looking to Grok to tell me, my technology questions. I'm not looking to Grok to give me my financial questions being answered. I'm not looking to Grok to create my daily planner. But I am looking to Grok to do what they do well, and that is animate photos. So, I think, and they got pushed, and then that push went too far, and Grok has to fix it. And I think that these blocks will go away very quickly as soon as the fix.
Yeah, I think this is a pattern we've seen, kind of a big reaction to things like this, and then it lasts a month, and then they make the additional fixes, and then it all gets smoothed over. But I do need something. I need you to promise me something. One day on this show, you'll bring these videos that you've created of you with the A-Team and everything else. I need to see these. They sound incredible. And
I'm happy to do that.
Regulators are... Yeah, we want to see Grok's video capabilities right here on the show. So you got to bring those for us sometime. But back to the story itself here. Yeah, next time we'll bring him on. I'm dying to see him. But getting back to the story here, regulators are saying that the problem wasn't just a misuse of Grok, but how the tool itself was designed. So my question to you, Stephen, is why are governments now focusing on design responsibility rather than user behavior? Is it because users are just going to do what they're going to do? We can't control that, so we have to control the source, which would be the platforms?
That's correct. I mean, I've said this a million times that we cannot legislate morality, and I think that it's easier to just go after the companies that are building the software faster than we can. And nobody wants to tell anybody what to do, especially not in election years. So no, we can't legislate morality, and they know that it's just easier to go after the quote bad guys than it is to go after the people that are actually doing it. So look, I like this. I think this is a smart move, and Grok will fix their problem.
Yeah, and from your vantage point, Stephen, is this primarily about child safety and deepfakes, or is this maybe the opening move in much broader AI regulation? What are your thoughts?
Broader AI regulations. They just didn't know where to start or how to do it, and I think they can start with this very situation, and they can have a way of saying it. Hey, look, this is a morality issue, and I don't have to legislate morality. I just got to tell these companies what to do. Okay, stop producing this kind of content, or we will pull your FCC license, or we'll pull your ability to be on the internet. All kinds of things that can happen behind it. Oh, they can't stop being on the internet? Yeah, they can. We saw that several times, right? And so I think that Meta is trying to put guardrails up. I think Google Gemini is trying to put guardrails up, and I think Grok with Twitter, with Elon, was just trying to push the envelope and not really tested it. And there are still some issues. Look, 10 years from now, 20 years from now, we're going to see more issues coming down the pipe with the AI, and they'll have to be fixing those. And look, we've had, when the internet came around, we didn't have legislation for the internet, and over the last 40 years, we now have legislation. So we now know, how to apply that. Again, it's enforcement. Okay, we can make the rules, we can make the laws, but do we enforce it, and who do we enforce it on? In this case, we don't want to enforce it on the actual user. We want to enforce it on the company themselves. And so it's a lot easier to make them pull their software and to fix it than it is to make a user stop making it in the way that they probably shouldn't be using it.
Yeah, that makes a lot of sense. I agree with you on the broader AI regulation, because it's like you want to pick an easy win. What's something everybody can agree on? Well, we can all agree we don't want deep fakes of child pornography or anything. So that would seemingly be a good place to start with the broader regulation, because that's just kind of an easy thing for everyone to get behind. So that makes a lot of sense. All right, gang, we're going to take a quick break here. But when we're back, Big Beat and I are going to be talking about the top Bitcoin story of this hour and Michael Saylor's latest billion-dollar Bitcoin buy. All that coming up when we return right here on Roxom TV News. Welcome back to Roxom TV News. This morning, the Bitcoin price is currently sitting at around $91,000. And before we get into our Bitcoin story of this hour, I want to get our guests' thoughts on Saylor's recent Bitcoin purchase. Stephen, Michael Saylor's strategy just added another 13,627 Bitcoin, spending about $1.25 billion on the purchase. So I got to ask, does a move like that, is that signaling broader institutional confidence in Bitcoin right now? Or is this simply strategy doing what strategy always does, which is buy more Bitcoin? What's your read on this recent purchase from Michael Saylor's team?
Over the last few days, I've heard a lot of comments from the institutional side saying that they really weren't looking to purchase more Bitcoin, that they had what they wanted on their balance sheets. I call nonsense. Michael Saylor knows exactly what he's doing. He's not being funny about it. He is being serious about it. This is the biggest buy purchase he's made since July of last year, and he's not stopping. He knows where we're going. We're going to 250,000. When people ask me when, I said, I don't care, right? Because I'm accumulating Bitcoin, and so is he. From an institutional perspective, we're looking at it. Yes, look, retail is getting scared. They're selling every time we turn around. The price goes up a little bit. They get nervous, and that's perpetual futures markets. They're nonsense because we're going higher. We're going sky high. We're going to $1 million per. But when look, in his case, he said it to you 2036, $1.5 million per. If I told you that Microsoft was going to $1 million per share, would you buy it? Of course you would. Why is this different?
Yeah.
It's different because of the people that are involved. The institutional side of this that are buying it, locking it away, and forgetting about it. The retail side of this market is scared. And I love scared money, Hank. Scared money makes me money. It doesn't usually make money for the retail side because they are scared. They can't hold something long. When I had over the weekend, two people saying, I don't hold anything more longer than an hour. What? What kind of an investor is that, right? That because it's because they don't have the fortitude in holding it, and that Michael Saylor does. So Michael Saylor's the way that he invests is a lot different than the way that you and I invest because he has a whole lot more money to be able to put into his number one asset. He believes in it. He understands it on a level that sometimes even I don't understand, and he's telling you that. He's not a dumb guy. He's telling you, quite frankly, I'm buying this because I believe in it. And that belief system that he has in it is perpetuating his purchases. And his purchases are not small purchases. He hasn't made a small purchase. This is huge. And when you make a purchase like this, it tells you one thing, that he believes in it in a way that he can put it away and never think about it again. He is not selling. He's buying. And he is going to be the bank in the future. So why not listen to what Michael Saylor says and accumulate yourself? If you're not accumulating Bitcoin right now, that's on you. Places like RoxomTV is telling you exactly what's happening. And that's the reason that we watch it. And that's the reason we're on here, is because they're telling you what's happening. Now, if you don't want to purchase Bitcoin, you want to purchase Solana or Ethereum, that's great. I'm not buying Pepe coin. I'm buying coins that I know that will be around in the future that will be used by the banking system that we know today. JP Morgan is telling you that. That told you 5 years ago we weren't buying Bitcoin. We weren't using Bitcoin. Today it's one of their biggest asset classes. So when I look at Bitcoin in general, I'm looking at what institutions are doing. I'm not looking at what retail is doing. And retail is saying sell. Institutions are saying buy. I'm on the institutional side. I'm buying Bitcoin.
Yeah, no, this most recent buy certainly signals a lot of conviction in Michael Saylor, and I think offers a lot of confidence to the broader market in general. As in, for instance, moving to our Bitcoin story of the hour, in London, one of the world's major banks is now officially stepping deeper into Bitcoin themselves, as Standard Chartered is preparing to launch a crypto prime brokerage business aimed at institutional clients. Now, the effort is being built through the bank's venture arm and is designed for hedge funds, asset managers, and large professional investors. A crypto prime brokerage offers trade execution, custody, financing, and settlement, the plumbing serious money requires. Now, this is not a retail experiment. It's infrastructure. Standard Chartered has already launched institutional spot trading for Bitcoin, and it has repeatedly published bullish Bitcoin forecasts, including a high-profile call that Bitcoin could reach $500,000 before President Trump leaves office. Now, the bank has also argued that a U.S. Bitcoin stockpile could eventually push central banks toward Bitcoin exposure. Now, the bank appears to be backing its outlook with action here, and that timing matters. You see, institutional demand has grown alongside regulated products, ETFs, and clearer legal frameworks. Large investors want exposure without operational risks. Banks want relevance in a market that is no longer fringe. And for viewers at home, this story isn't about price targets. It's about legitimacy. See, when global banks build crypto infrastructure, they're betting the asset class isn't going away and preparing for a future where Bitcoin sits alongside traditional markets, not outside of them. Bringing Stephen back. Stephen, for people who are outside of finance, what does a crypto prime brokerage actually do, and why is it significant that a global bank is building this infrastructure now? What are your thoughts?
Well, you had to think about it from the perspective of Standard Chartered itself. It's the 42nd largest bank in the world, and they're a member of the FTSE in London, and their bank pretty much is focused on Asia, Africa, and the Middle East. Majority of places where they're the unbanked, so they're making a play for the unbanked. And when I look at it from that perspective, those unbanked also don't have brokerages, so they're killing two birds with one stone, saying, not only am I going to give you the banking ability through Standard Chartered, I'm also going to give you the ability to buy and purchase crypto so that you can be a part of the new economy. The total assets of Standard Chartered is right around $850 billion. They're talking about 910 billion up to $1 trillion in assets here in the next, say, decade. If that's the case, they're making a play for the future and not the past. A prime brokerage gives them the access to everything: stocks, options, futures, crypto, all of it in one place. This is a very big deal. A big deal enough to say, hey, Mr. Saylor is exactly why he's doing this. He's not going after this for just the US market. He's going after a larger market, the unbanked. And he's saying, I want to be the bank also for the unbanked. And here we go. Look, and that's, we're talking about one of the largest banks in Europe. We're not talking about a small little niche bank. This is a large global emerging markets bank where we know in the future Asia, Africa is going to be a part of the global banking system. And that banking system is no longer just credit cards where they're trying to protect their own selves in the banks. The banks are saying, look, I'm going to be a part of the new economy and not waiting on somebody else like Michael Saylor. So now it's not just Michael Saylor wanting to be a bank. The bigger banks are becoming a part of the bigger picture of the unbanked. And so now, yes, I think this is a very smart move on Chartered. And I also think you're going to see a lot more banks doing that. The question I got asked several times today, well, if Michael Saylor made this huge buy of $1.5 billion in crypto and Bitcoin, why did it go up? Well, there's still the OGs on the sideline. There's still the miners still sailing. This is a bank with $850 billion, not $1 billion, that can purchase themselves and buy into it. This is a place where new money is coming into it. New fiat is coming into it. This is why I'm saying that Bitcoin is not going to be 92,000. It's going to be 126,000. We're going to break all-time highs soon, and we're going to 250,000. You saw Tom Leack once again over the weekend talk about it. They're not talking about it because they want to see their pal make more money. They are. It's about because of the new economy that's coming and coming fast. And if you want to be a part of that, and you want to be part of the Asia-Africa dialogue, then this is how you do it. And these banks are saying, I want to be a part of the dialogue, and I'm going to do it, and I'm going to do it with my own money, and I'm also going to do it and bring on new clients. And this is how they're going to do it.
Yeah, and speaking of being part of the dialogue, Standard Chartered has been openly bullish dialogue-wise on Bitcoin for years now. So it does beg the question, though, does launching this platform suggest that banks now feel pressure to align their actions with their forecasts? Do you feel like this move is indicative of that?
100%. Jamie Dimon 5 years ago said, if anybody's trading Bitcoin in my shop, I will fire them. Within minutes, his own daughter said, Dad, I own Bitcoin too. Right? I mean, this is the difference of now what's happening. And JP Morgan now is one of the biggest owners of crypto, right? Of Bitcoin. So when I look at it from that perspective, nobody wants to be on the outside looking in. And so you're going to start seeing niche banks, bigger banks. I expect more banks, especially that have more of a flair towards Africa and Asia, and they have a foothold in those two countries and continents, that you're going to definitely see a move bigger than even Standard Chartered is making. I'm looking at bigger banks doing even bigger things. So yes, this is what I'm seeing. No, I don't think this is a one-off. Yes, I think prime brokerage is good for them and giving them the ability to be a part of the global new economy.
Well, I think you said it first here. Bigger banks doing bigger things, and we're getting this reported to us by Mr. Big Beat himself. So I got to say, Stephen, as always, thank you so much for providing your insights and expertise and sharing those with us here at Roxom TV News. Always an absolute treat having you on Mondays and joining us on the show. Before we let you go, though, there's a lot of chaos in the world, and it's really hard out there to be an individual trader competing with the big boys. I know your platform, Quasar Markets, does just that and allows little players in the space to actually have the information so they can participate in the market with the big guys. Really quick, tell us about it and where our audience can go to learn more about it if they too want to take advantage of it.
That's right. Thanks, Hank. Look, quasarmarkets.com is exactly where you can find us. And we're trying to find the nuggets of those very points of how to be a part of the economy and understand where the movements are going before they happen. A good example of that would be silver, buying silver at $19 an ounce, not buying it at 85. We want to make that understandable. Right now, the machines are telling us that orange juice could be the next play, right? And so we want to be ahead of the game, not behind the game. And we knew about Standard Chartered looking to make this play into crypto long before the news ever caught it. And we're excited about that and what we have in store for the future. So, and the partnership that we have with RoxomTV. So we love that.
Yeah, and we love you. So thank you so much, as always, for joining us today, Stephen. I'll let you enjoy the rest of your week, and we'll see you next week for more of the big scoops and the big beats. So thanks for joining us, as always, and enjoy the rest of your week, bud.
Big love. Thanks.
Very good. Good luck to you, bud. See you soon. All right, we're going to take a quick break here at Roxom TV News, but when we're back, we're going to be returning with our second hour of today's show with the latest on the unrest in Iran and the push to halt online sports gambling. Oh, I don't like that, but we'll be back with that and more when we return after this quick break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to Roxom TV. Here's what we covered in the first hour of today's show, just in case you missed it. Well, first, we broke down the escalating clash between the White House and the Federal Reserve after Trump's Justice Department issued subpoenas tied to Chair Jerome Powell's congressional testimony. But Powell is firing back, warning the probe looks less like a construction review and more like political pressure on monetary policy. We looked at Trump administration's new food pyramid, prioritizing protein, healthy fats, and whole foods while urging Americans to avoid added sugar and ultra-processed foods. And finally, we covered an AI crackdown in Southeast Asia, where Malaysia and Indonesia became the first countries to block Elon Musk's chatbot Grok. Now, regulators say its image generation tools enabled non-consensual and abusive content, including deepfakes involving minors, signaling that governments are no longer debating AI risks. They're acting on them and doing it faster than Silicon Valley expected. Now to the top story of this hour, guys. Let's roll the stinger. All right, welcome back. Our top story of this second hour is occurring in the Middle East, where Iran is facing its most sustained and dangerous wave of unrest in years, as protests driven by economic collapse and political anger continue to spread, even as the government insists the situation is under control. Now, this graphic of the map from Iran highlights the protests that have broke out since late December. Now, what began as demonstrations over the rapid collapse of the Iranian rial and soaring prices has now evolved into broader anti-government protests across major cities, including Tehran, Mashhad, Isfahan, and Shiraz. Now, over the weekend, crowds once again poured into the city streets, and The Guardian put together some of the videos from social media and reaction from Khamenei. Let's take a look.
دیشب در تهران در بعضی جایی دیگه آمادگی هاتون رو یه مش تخریبگر آمدن ساختمان متعلق به کشور خودشون رو خراب کردن. مثلا فرض کنید فلان ساختمان دیواری رو خراب کردن برای که دل رئیس جمهور آمریکا خوش بود.
Now, Iranian authorities say the unrest has largely been contained, but independent reporting, along with video verified by international media, tells a different story, one of continued clashes between protesters and security forces. Now, according to human rights groups and international monitors, at least 544 people have been killed since the unrest began, including civilians and members of Iran's security forces. Now, that makes this one of the most deadly protest movements the country has seen in decades. And on Sunday, civilians carried coffins through the streets in scenes that underscore just how deeply the violence has cut. Despite mass deployments of riot police and plainclothes security units, protests have continued in pockets across the country, even as officials claim control has been restored. The regime's message from the top has been unmistakable. Supreme Leader Ayatollah Ali Khamenei has rejected any talk of concessions. Meanwhile, President Masoud Pezeshkian has attempted a noticeably softer approach. He has pledged to crack down on price gouging and urge restraint by security forces. But analysts say real power in Iran does not rest with the presidency. It rests with Khamenei and the Islamic Revolutionary Guard Corps. And that power structure appears to be hardening, not bending. Now, inflation remains near 40%, the rial continues to trade at record lows, and many Iranians interviewed by Reuters say they no longer believe the system is capable of meaningful reform. Foreign pressure is now adding another layer to an already volatile situation. President Donald Trump said Washington is locked and loaded to support Iranian protesters. He also said he is prepared to work with Elon Musk on restoring internet access after Iranian authorities imposed widespread shutdowns. Here's what Trump actually said. Let's take a look.
Have they crossed your red line yet to trigger a response?
Well, they're starting to, it looks like, and there seem to be some people killed that aren't supposed to be killed. These are violent, if you call them leaders, I don't know if they're leaders or just they rule through violence. But we're looking at it very seriously. The military is looking at it, and we're looking at some very strong options. We'll make a determination.
Are you going to send Starlink to Iran, sir, to help the people in the ground with the internet blackout for more than 72 hours?
We're going to be talking about that. We may get the internet going, if that's possible.
Are you talking to Musk
We may speak to Elon, because as you know, he's very good at that kind of thing. He's got a very good company, so we may speak to Elon Musk. And in fact, I'm going to call him as soon as I'm finished with you.
Now, inside Iran, authorities have responded by arresting thousands of people, expanding internet restrictions nationwide, and increasing patrols around universities, markets, and government buildings. The strategy here is clear: deterrence over dialogue, control over compromise. Yet, despite the show of force, analysts say unrest reflects something deeper than a temporary spike in anger. Iran's population is younger, poorer, and increasingly disconnected from the revolutionary ideology that once sustained the Islamic Republic. And with economic pressure mounting, uncertainty surrounding succession to the 86-year-old supreme leader, and Iran's regional influence under strain, the leadership is facing overlapping crises at home and abroad, even as it insists it remains firmly in control. So you might be asking, how is all of this landing in global markets? Well, so far, cautiously. You see, oil prices have edged lower rather than spiking. Brent crude is now hovering in the low $60 range as traders weigh unrest in Iran against a global market that remains relatively well supplied. Investors are also factoring in the potential return of Venezuelan exports following Nicolas Maduro's ouster, which has softened immediate supply fears. In short, markets are waiting for proof of real disruption before pricing in a major risk premium. And that's partly because Iran's role in global oil markets isn't what it was. Today, Iran accounts for roughly 3% of global oil supply, producing about 3.3 million barrels per day, far below historical peaks. About 90% of those exports now go to China, often through opaque trading networks and discounted sales. Now, that limits Iran's leverage over global prices, but concentrates risk in Asia, where refiners would scramble for alternatives if flows were to be interrupted. The bigger concern isn't protests alone, it's escalation. Traders are watching closely for any sign that unrest could spill into regional confrontation, especially involving the Strait of Hormuz, the narrow choke point that handles roughly a quarter of the world's seaborne oil trade. Now, Iran has threatened to disrupt the strait in past crises, though it has never fully closed it. Now, analysts are saying even partial disruption would send prices sharply higher, particularly for oil and LNG headed to Asia. For now, though, those risks are being offset by other supply developments. Goldman Sachs has told clients that oil prices are likely to drift lower over the year due to surplus conditions, even as geopolitical flashpoints continue to inject volatility rather than sustained price spikes. Now, there is a bigger question that remains here, and is, does Trump have the support here to actually intervene? Well, in Washington, there is growing skepticism, including within Trump's own party, about whether military intervention would actually help Iran's protesters. Several senators from both parties have warned that direct military action could backfire. Republican Senator Rand Paul said he is unconvinced that bombing Iran would weaken the regime, warning it could instead unify Iranians against an external enemy. Democratic Senator Mark Warner echoed that same concern, pointing to the long shadow of the 1953 U.S.-backed coup in Iran, which still shapes Iranian distrust of American involvement today. Others take a harder line. Republican Senator Lindsey Graham has argued the U.S. should embolden the protesters and scare the hell out of the regime, saying pressure, including the threat of force, is necessary to accelerate change. U.S. military and intelligence officials are now preparing to brief Trump on a range of options, even as Tehran warns it would retaliate against U.S. bases if attacked. The debate reflects a central dilemma here. How do you support a protest movement without strengthening the very system it's trying to dismantle? And according to CNBC, the options being discussed stop well short of a full-scale war. Trump is expected to receive briefings on measures ranging from cyber operations and covert action to sanctions escalation and limited military strikes. One of the most immediate tools would be cyber and information warfare. That could include disrupting Iranian surveillance systems, boosting anti-government messaging, or helping restore internet access after blackouts. More aggressive options include targeted strikes on Iranian military or security infrastructure. Now, analysts are cautioning that even limited kinetic action could spiral quickly, triggering retaliation against U.S. assets or shipping in the region. Now, what is notably absent from the discussion is a ground invasion. There has been no major movement of U.S. ground forces, and officials say Washington is not preparing for occupation or conventional war. The risks, analysts say, is that pressure meant to weaken repression could instead unify regime elites and undercut the protest movement if framed as a foreign aggression. All right, I want to step back for a second and kind of give you my take on this, because here's what makes this moment a little different. This doesn't feel like a protest wave the regime can simply outlast, but it also doesn't look like an obvious tipping point where everything just collapses overnight. What we're really watching is a slow erosion of legitimacy. When a population stops believing a system can reform itself, something subtle but very important changes. Fear doesn't disappear, but it loses its grip. Promises stop landing, and slogans start sounding hollow. Repression can still buy time. Pro-government rallies can still create the appearance of control. Internet shutdowns can still mute coordination. But none of those tools address the underlying math. Inflation that keeps eating away at daily life. A currency that no longer functions as a store of value. A younger generation that feels disconnected from the ideology and the future the system is offering them. Those pressures don't explode all at once. They accumulate. And that's what makes this phase different for the regime. Not because collapse is guaranteed tomorrow, but because every response now seems reactive instead of confident. Add that to the uncertainty around succession, the strain on Iran's regional influence, and the growing sense among ordinary Iranians that nothing fundamental is going to change, and you end up with a government that's not managing risk, not inspiring loyalty. Now, how this ends is still very much an open question. It could bend, it could fracture, or it could harden further before something finally gives. But what's clear here is this. The Iranian leadership isn't governing from belief anymore. It's governing from momentum, and momentum sooner or later always runs out. All right, now to a story unfolding in Cuba and across the Caribbean as President Trump says Venezuela will no longer be allowed to send oil or money to Cuba and suggests the island should make a deal with Washington. Now, the move follows the U.S. capture of Venezuelan President Nicolas Maduro and the enforcement of a strict oil blockade. Now, Venezuela has been Cuba's largest oil supplier for years, sending roughly 26,500 barrels per day last year alone. Now, since Maduro's capture, shipping data shows no Venezuelan oil cargoes have departed for Cuba. Trump framed the cutoff as a necessary step, arguing that Cuba has relied on Venezuelan oil and financial support for decades now. Cuba's leadership responded forcefully. President Miguel Diaz-Canel rejected Trump's remarks, saying the island will not accept ultimatums and is prepared to defend its sovereignty. Cuba's foreign minister added that Havana has the right to buy fuel from any country willing to sell it. Now, behind the political stalemates, the situation on the ground is already severe. You see, Cuba is struggling with rolling blackouts, fuel shortages, and chronic shortages of food and medicine. Many Cubans go without electricity for much of the day, even in Havana. Now, the economic pressure has driven a record number of people to leave the island in recent years, many heading to the United States. Mexico has stepped in as a partial alternative oil supplier, but volumes remain limited and may not fully replace Venezuelan shipments. And U.S. intelligence assessments reportedly describe Cuba as deeply strained, though not on the verge of immediate collapse. The U.S. raid in Venezuela also killed dozens of Cuban security personnel, highlighting how closely the two governments were linked. Now, why this matters to viewers at home is that energy remains one of the most powerful tools in all of geopolitics. And for Cuba, losing Venezuelan oil support could turn an already fragile situation into something far more difficult to manage. All right, we're going to take a break here at Roxom TV. When we're back, we're going to have more of this morning's top stories, and we'll be joined by our second guest to break it all down, Mr. Lee. So stay tuned. We'll be back right after these quick messages. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card, buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, welcome back to Roxom TV News. We are thrilled to welcome back our special guest of the day. He's a voice that never pulls punches, never dodges the big questions, and always brings clarity to the chaos. And today he's joining us to break down some of the biggest stories shaping the moment. Please give a big welcome back to our good friend of the show, Mr. Lee. Mr. Lee, happy Monday, happy New Year. Welcome back. How are you? I'm loving the hat.
Hey, happy New Year, Hank. Great to be back on the show. Appreciate it.
Oh, the pleasure is all ours. We got a lot to talk about, but the first thing I want to do here really quick, Mr. Lee, is I want to revisit a story from our first hour. Then you and I are going to jam about it. Sound good?
Perfect. Let's do it.
All right, so the U.S. Justice Department has just issued a grand jury subpoena to the Federal Reserve, officially tied to cost overruns and a renovation of the Fed's Washington headquarters. But Federal Reserve Chair Jerome Powell says the investigation feels like something much bigger. In a rare and unusually direct public response, Powell accused the probe of being a form of political pressure connected to President Trump's repeated demands for faster interest rate cuts, warning that it threatens the Fed's independence. Now, while Trump denies involvement, reporting suggests that allies inside the administration have been exploring ways to weaken Powell as his term as chair ends this spring. Now, markets reacted quickly with the dollar falling and gold surging, and lawmakers from both parties pushed back, warning that using legal tools to pressure the central bank risks undermining trust in United States institutions. Now, what began as a dispute over building renovations has turned into a test of whether monetary policy can remain insulated from political power. We're bringing Mr. Lee back. Mr. Lee, at a basic level, why does it matter that the Justice Department is subpoenaing the Federal Reserve, even if the official reason is something as mundane as cost overruns on a building renovation? What's the bigger picture here?
Yeah, there's definitely a bigger picture. I mean, if you think about the Federal Reserve has been around since 1913, right? Really started from the banking industry, ostensibly to head off banking panics and banking crashes that were happening during the free banking era prior to 1913. But ever since, there's always been, I think, this pushback of presidents that want more control over all of the levers of an economy. Great example, go back to the 1970s, right? Back when Nixon was president, he was pressing Art Burns, the Fed chair at that time, to lower rates so they could have a hot economy for 1972 so he could win re-election. This has always been the case, that the presidency wants full control over the central bank as much as they can. And that's really the same thing that's happening here. There's a desire, of course, to have the economy run as hot as possible for the midterms. And so obviously Trump's been putting a lot of pressure on Powell. Republicans have been putting a lot of pressure on Powell to get things the way they want so that the midterms go the way that they want. So it's not surprising to me at all. You have to look beyond the surface level of these stories. They want lower rates. They want the Fed to continue to, do QE, even though they say, oh, that's so bad for middle America, which it is. We can get into that if you'd like. But that doesn't matter. They want the economy to run hot. They want assets to continue to go up. And they are going to want to deal with the lower part of the K-shape at some point. But they want the Fed to basically do what they want them to do. This idea of independence is kind of a misnomer.
Yeah, and Jerome, he didn't just sit there and take it. He actually took the unusual step of responding publicly and suggesting that this investigation is really about pressuring the Fed to cut rates faster, as you mentioned. So my question for you, though, Mr. Lee, is how rare is that kind of pushback from a Fed chair? And what does it signal to you about how serious this confrontation has really become?
I almost fell out of my chair. So I was on X, and I happened to see that post come along from the Kobesi letter, posting Powell pushing back on this subpoena and trying to frame it as the Trump administration just playing politics to get them to lower rates, which of course is their desire. That is, he's not wrong about that. But it's a pretty interesting move. I mean, I don't think we've ever seen a Federal Reserve chair come out and talk basically at the president in that way, or to the administration in that way. What's funny is the Federal Reserve pretends to be kind of a non-political organization, as this kind of independent. We talk about Fed independence, I mentioned a few minutes ago. That's not really a thing. These are human beings at the end of the day. They have political ambitions. They have parties that they vote for. They have parties that they give money to, etc. So I'm not casting aspersions or impugning his character. I'm just simply saying the Federal Reserve is a political animal, just like any other institution that exists. It's unique in that, of course, it's not federal and it doesn't have any reserves. It's not a true government agency, but it is very much a political entity to the extent that it has people. And that was a pretty political move. I mean, I think what some people are frustrated by is in 2024, the Federal Reserve lowered interest rates. right ahead of an election year. Some people think maybe it was to help Kamala Harris win, maybe not, hard to say. And then, of course, no interest rate cuts for several quarters, even as inflation continues to decline. And then now finally a couple of reluctant interest rate cuts. So all that said, if I cut below the noise there, this is a pretty political move. It's a political organization. He's a political person like anybody else. I'm not making him unique. And that was a very strong political, hey, leave me alone. We're doing our thing, go pound sand. Well, somebody's got to hold the Fed to account, and I think that's what's happening here.
Yeah, absolutely. And yeah, this absolutely does feel like a political move, which brings me to my next question for you, because let's say this is a political move, and let's say investors start believing that interest rate decisions depend on political alignment rather than real economic data. What do you think that does over time to trust in the dollar, in U.S. bonds, and kind of the broader financial system if this was, in fact, a political move? What effects do you see potentially having, as we go on here?
I think that's a good question, Hank. And to be honest, I think if you look at the price of gold, I think you're seeing the answer to that question. I mean, clearly, investors are seeking a safe haven. I would love for them to eventually choose Bitcoin, and I believe that they will at some point. But right now, you're seeing gold over $4,600 an ounce for the first time. You're seeing silver back over 85. And so clearly there's a desire to, hey, I'm not going to put all of my wealth in treasuries. People are starting to move more into these precious metals that have been money for thousands of years. So I think that's one impact that you're seeing, is that I think there's more of that demand for precious metals like silver, like gold. And I think eventually Bitcoin will also catch that bid. But the other thing that people need to think about is we're in what's called fiscal dominance, right? So the U.S. is basically spending so much more than it takes in, 120% debt to GDP levels at this point, and $2 trillion a year deficits. The interest expense on the debt is higher than we spend on defense or almost anything else. And so you're getting to that point where the Federal Reserve can't actually do all of that much. It only has so much that it can move rates up to try to head off inflation if it does come, as you saw in 2022. Everybody said, oh, this is going to be like Paul Volcker, right? Powell's going to be like Volcker and bring rates to 10, 12, 15%. You can't do that. Deficits would blow out to trillions of dollars. So that's not going to happen. But then he has to bring them down to some point so that we can refinance our debt, because we're having to roll trillions of dollars of debt every few months. So the Fed's kind of pinned in. And I think, again, I go back to, that's why you're seeing hard money, gold, silver, I think eventually Bitcoin, starting to catch a bid.
Yeah, and I'm glad you mentioned Bitcoin, because from a Bitcoin and a sound money perspective, do you think moments like this reinforce the argument for a neutral, rule-based system like Bitcoin? Or do they maybe risk triggering a backlash where governments try to reassert even tighter control over money? What are your thoughts on that?
I think the answer is yes. I mean, I think for some governments, you are going to see them really try to lock down on capital controls, how much of their currency can flee to safe haven assets like Bitcoin or crypto. So here's how I feel about it. I do believe that, yes, Bitcoin this is the moment Bitcoin was made for. A credible, neutral currency. Nobody's in charge of the price of money. Or I've got this wonderful book here, The Price of Time. That's a great book. I recommend folks read about money. But nobody's setting the price of time here, or which is interest rates. The network sets that. The network sets the admissions. There's no humans in control that can try to corrupt things for certain parties, pick winners, losers, things like that, which our fiat system has certainly done. So this is definitely Bitcoin's moment. Having said that, one of the things I've observed is the conversation shifted in the U.S. from Bitcoin being this new future amazing asset to a lot of interest in stablecoins, which has been kind of interesting. And I'm hearing a lot of these arguments for stablecoins for cross-border payments and all these types of things. And I'm like, that's really what Bitcoin would be actually better at. But of course, the reason for stablecoins, we go back to the debt and fiscal dominance. We're interested in new buyers of our treasuries. And so that's kind of catching a lot of interest. But I think that'll be short-lived. I think long-term, people will come back to the true Bitcoin use case of it being divisible, portable, totally uncontrolled, and find that, hey, if I put my money there, I can go anywhere I want to go in the country, anywhere I want to go in the world, right? I can't, no one can take it from me. Where if you have $10,000 of cash, they're going to take it at the airport if you try to change countries. So.
Right. I think Kathy Wood even mentioned that a few weeks ago, and she kind of revised her, it was either 5 or 10-year price prediction for Bitcoin. It was originally supposed to be 1.5. She brought it back to 1.2, saying that she thought stable coins would probably occupy a portion of the space she thought Bitcoin would be for many of the things you just mentioned. But we'll see how it all plays out. 1.5, 1.2, they both sound pretty good to me. All right, we're going to continue with our next story here, Mr. Lee. That is also happening here in the United States, specifically in Tennessee, where regulators are drawing a hard line on prediction markets. Tennessee Sports Wagering Council has ordered Kalshi, Polymarket, and Crypto.com to immediately stop offering sports-related event contracts to residents of the state. Now, regulators argue the products amount to illegal sports betting under Tennessee law. Now, the cease and desist letters say labeling wagers as event contracts does not exempt them from gambling statutes. You see, under state law, sports betting is restricted to licensed sports books operating under the Tennessee Sports Gaming Act. The council also raised concerns about missing consumer protections. Those include age verification, responsible gaming tools, and anti-money laundering safeguards required of licensed operators. Tennessee ordered the platforms to void all existing sports contracts and refund users' funds by January 31st of 2026. Now, failure to comply could trigger fines up to $25,000 per violation, court injunctions, or referrals to law enforcement. The platforms dispute the state's authority. Kalshi and Polymarket argue their contracts fall under federal commodities law, overseen by the Commodity Futures Trading Commission. Tennessee regulators, however, say federal oversight does not override a state's right to regulate sports wagering within its borders. Similar enforcement actions are emerging in other states, and Kalshi has already filed lawsuits challenging those restrictions. Now, why this should matter to viewers at home goes beyond betting. This fight will help decide whether prediction markets are treated as financial instruments or gambling products. That distinction will shape how far crypto-adjacent markets can expand inside the United States. And it may determine whether innovation moves forward under clear rules or gets dragged into years of legal limbo. Bringing Mr. Lee back. Mr. Lee, for viewers at home, Tennessee is essentially saying these platforms crossed a line. Can you explain in simple terms what they actually meant here? What was the line that's being crossed? Why is this important? What's your beat on this situation?
Yeah, it's really interesting. And maybe just to take a little bit of a step back and set the table, I think about the difference between crypto and kind of the former, let's say, Web 2.0 type commerce as really being at odds here. So if you think about crypto, it's basically kind of a Wild West. You can kind of, anybody, as long as you have a wallet, you can get access to crypto assets or different DeFi markets or different things like that. And we don't really care about your driver's license. We don't care who you are. If you want to get a Bitcoin wallet, there's no age verification. You just create a Bitcoin wallet, store your Bitcoin there, and you can transfer it, move it, transact as you desire. So that is kind of the crypto world under which markets like Polymarket came to be. I know Kalshi is not necessarily on crypto rails, but Polymarket certainly is. And that's the ethos I think that they're operating under. And prediction markets are taking the world by storm. You've probably seen, your viewers have probably seen many deals being struck by news organizations and Kalshi and Polymarket for different purposes because there's so much signal there. The prediction markets predicted that Trump would win when everybody thought that he wouldn't. And numerous other things have been predicted by these markets. So it's more about signal. It's about information. It's about the digital transformation of information and digital transformation of knowledge. And so the old world doesn't really work that way. So now what they're clashing against is this idea of, well, wait a minute, within a state, I want to be able to regulate all of the commerce happening within my state. And so, of course, they're pushing back on that. But the problem is, interstate commerce is kind of I'm not a lawyer, of course, but, that's kind of a well-worn path here. And that's exactly what you've got. These are online global platforms that are about the digital transformation of knowledge and information. And we'll have to kind of update our thinking on how does that fit within a gambling context, quote unquote.
Yeah, we're encountering a lot of new interesting questions here with these prediction markets because, regulators are arguing that calling these wagers event contracts doesn't change kind of the substance of what's happening here. So, Mr. Lee, from your perspective, how do lawmakers usually decide whether something is genuinely financial innovation or just gambling with the new label? Because this one is walking that line pretty close.
Well, it does beg the question: what really is gambling, right? Are zero DTE contracts gambling, right? Are long call options contracts gambling? I mean, you think back to 2021 and GME, right? GameStop trade, everybody trading options, and what were they doing? YOLOing, their paycheck for call options, trying to make a bunch of money. So what really is gambling? So I'll start with that, just kind of as a general pushback.
Yeah.
But I think you're hitting something spot on here, which is government, whether it's state government or federal government, is really behind the curve. They're operating, I think, from a 20th century kind of analog mindset. And again, I'm saying this as somebody who, I'm an Austrian, I'm from the Austrian School of Economics. I'm very big on states having the rights to regulate things within their state. But having said that, with that view, you also need to modernize. You need to be thinking about how things are digitally transforming. You can't look at, okay, well, this is a casino that's sitting in my state, clearly with branches or locations in my state. That's one thing. But now that you have this kind of online platform, again, goes kind of beyond just wagering. It really truly is about, hey, what does the market think is going to happen here? That's a bit of a different. You could argue there's some gambling happening there, but you could argue it's that or something else, right? There's more to be said there, about showing signal about what the market thinks, and the best way to show that signal is with some kind of financial. Some kind of a financial commitment, right? So having those paid contracts is key. Like I made a bet, it was a total flyer that Mamdani wouldn't win in New York. I was fairly confident that he would, but the odds were so incredible. Let's take a shot. And that I voiced my information to the market that, hey, there's a chance he might not win, even though all of the news media and everybody's saying he's going to win. Obviously that didn't work out, but that's the idea. We want to get that signal from the market on what's going to happen in a particular situation. How's the Fed going to rule on interest rates? Who's the next Maduro that's going to happen that Trump's going to go after? Those kinds of things. We want to get that information. We don't want that to be hidden. And financial means is the best way to encourage that signal to come out.
Yeah, absolutely. And it really encourages people to quite literally put their money where their mouth is, which almost kind of, to me, legitimizes it in some way. And also, I have friends that have lost way more money on Robinhood than they have on DraftKings. So like you said, what really is gambling at that point? Really, to me, it kind of feels like prediction markets are kind of, remember earlier episodes of Who Wants to Be a Millionaire? And they would poll the crowd and ask the crowd. It's a wisdom of the crowd that you have, and if you want to play in it, you got to put money to it. So I don't know. It's an interesting gray area. We'll see where they rule on it. But getting back to the story, from a liberty and a freedom standpoint, Mr. Lee, when a state shuts down something like this so aggressively, is this really about consumer protection? Or is it maybe about preserving centralized control over who gets to offer markets and take bets? What are your thoughts on that?
No, I think you make a really good point. In the Bitcoin world, we often talk about governments can't ban Bitcoin; they can just ban themselves from it. So, you've seen certainly .coms that, okay, if you don't want us in your state or in your country, we're going to pull out, and you don't get to enjoy that revenue, the tax revenue that might have come from the income, et cetera. So there's definitely a control aspect. But I go back again to, I think, two things. One, there's certainly an aspect of control. But two, it's just falling back on what you're comfortable with. And as a legislator or as a governor, as the state senate, et cetera, they have to kind of update their priors, really, and kind of go beyond 20th century approaches to things and think about the digital transformation of how humans are going to interact. Say, for example, once AI becomes more of a thing and you have more AI agents that are out there, imagine them leveraging these markets. And again, they're not going to pay attention to state borders, by the way. They're just going to have an IP address and live in various data centers bouncing around. Maybe they leverage the prediction markets to try to understand, okay, well, I'm responsible for this person's assets. And so how is this Fed decision going to happen? Oh, well, the prediction markets are weighing this way. Okay, well, I'm going to move, my owner's kind of assets over here. They're going to make decisions based on this. And so you have to update your priors, I think, as state governments to say, oh, well, maybe it's a little bit of a bigger world we're entering into. Let's not just go wild, maybe, but how do we think in the future rather than just trying to lock things down and go back to the 20th century?
Yeah, no, it'll be interesting to see how this all plays out. And this is one of those things, these new types of, I don't even really call this new tech, but these new systems, they're put out there, and then we find ourselves kind of trying to put laws on them after the fact, and it gets really sticky, and there's freedom issues, and I don't know. We'll see how this plays out. I know, like, what is it? One of them is integrating, I think, with the Wall Street Journal. Like, those things, these prediction markets are here to stay, and I'll be really interested to see how they continue to kind of be infused with our modern day systems and where ultimately states and the government lands on these. I don't know, I know as well as much as the next person, which isn't much, but hey, they're fun, and I love to gamble, so I'm here for it. All right, we're going to take a quick break here, Mr. Lee, but when we're back, you and I are going to be talking about our top Bitcoin story of the hour, and it has something to do with Elon Musk and someone he's calling a demon. Can't wait to get into it. We'll be back with that and more when we return right after this quick break. RoxomTV News. So Bitcoin's price is currently sitting at around $91,000 this morning, and that brings us to our second Bitcoin story of today's show. And this one is unfolding online, but the argument behind it goes back more than 100 years. You see, Elon Musk stirred up a familiar fight after replying to a post by tech entrepreneur Balaji Srinivasan, who argued that the collapse of Western Keynesian economics will eventually rival the fall of the Soviet communism. Now, Musk's response was blunt. He wrote, "Keynes was a demon." Now, that short comment instantly reignited a long-running debate over how money should work and who should control it. Now, John Maynard Keynes was a British economist whose ideas reshaped modern economic policy in the 20th century. He believed that governments should step in during downturns by spending more, running deficits, and expanding the money supply to stimulate demand. Those ideas became the foundation of the modern central banking system and are still widely taught and practiced today. But within Bitcoin circles, Keynes has long been a controversial figure. Bitcoin advocates argue that Keynesian policies made inflation normal, debt permanent, and money something that could be endlessly created by governments. They say that process quietly eats away at savings and rewards political short-term fixes over long-term stability. Now, Musk has hinted at his own view before, criticizing what he calls government magic money computers and overspending on Ted Cruz podcasts. Let's take a listen.
So I call a magic money computer any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, some there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
Now, Bitcoin, as you may know, by contrast, is actually built around scarcity with a fixed supply and no central authority capable of changing the rules. Supporters see that as a feature, not as a bug. We're bringing Mr. Lee back. Mr. Lee, for viewers who may not have studied economics, why did Elon Musk's short comment about Keynes immediately spark such a strong reaction across finance and Bitcoin circles? What are your thoughts on it?
Well, Bitcoiners have, long had an opposing view, right? So if you think back to, and not to get too history on your viewers, but to go back a little bit to World War II, following the war, we came up with this agreement called Bretton Woods, where we said, okay, everybody's gonna, the price of gold will be this, and everybody will tie to the US dollar, and we'll be fine, right? We're not going to adjust the prices of our currencies. And then fast forward to 1971, and Richard Nixon is finding that, people keep coming and redeeming their dollars for gold, and we're running out of gold, so we better do something about that. And so he closes the gold window, and now we are on a full fiat currency and have been since 1971. And so what's been happening, right? Exactly what you described, Hank, and what now people call the K-shaped economy that's only continued to get worse and worse and worse, that those who are holding assets are benefiting really, really well from the whole central bank regime and fiat currency regime. They do very well because if they hold assets and the more and more of the currency is being put out there. If you go back, it's since 1971, about 7% a year increase in the number of dollars in the system. And so if you have assets, the dollar value of your assets is going up. You're feeling good. you're happy, right? But if you're a middle class person working by the hour, maybe you don't have a lot of assets, you've seen that your income hasn't been able to keep up. And so Bitcoiners have known this for a very, very long time. And it's one of the reasons we saw Keynesianism as this kind of, I don't know, it really kind of goes against, I think, what America was really about. America was really about this kind of free place that people could pursue happiness, right? We're not going to guarantee happiness, but we're going to say that you can pursue happiness with a level playing field with, back then, it would have been real money, gold, right, at that time, or as we like to call it, analog Bitcoin. I think somebody on Bloomberg said once. And now we have digital gold, right? Now we have Bitcoin to truly store our worth. But that's what it really stirred up for us, I think, is this idea of, yeah, when that is over, we're going to have to find something. Some countries are going to probably gravitate towards gold, but I think those that are really 21st century minded are going to gravitate towards Bitcoin.
Yeah, absolutely. And, at a basic level, John Maynard Keynes argued that governments should manage economic downturns through spending, debt, and money creation. So my question to you, Mr. Lee, is why do those ideas still have so much influence over how our economies function today?
That's a really good question. I think the answer really is because there's not another good alternative. As we've followed that Keynesian model over all of these decades, where anytime there's a downturn, we got to raise aggregate demand. That's the word that you often hear from Keynesian economists, which basically means, hey, the government should step in. If private sector is pulling back on putting money into the economy or hiring people, we go back to, in fact, actually, I'll take you even back further. We go back to like the New Deal era, right? Post the Great Depression, where the government went in and had these, CCC groups and hired people to go and, empty one ditch and fill another ditch, or, build dams, build this, build that. And so ever since then, that we've always had this sense of, well, that's what we should do. Anytime that there's a downturn, let's just have the government go ahead and do that. And so the problem is we've done that for so long that now we have debt to GDP of 130%. We have, as I said earlier, interest expense over $1 trillion a year. And so we're getting to where we can't keep doing that without getting into kind of a hyperinflation situation where we're having to put so much money into the economy. Like during COVID, we printed $5 trillion during COVID, right? Something like a quarter, don't quote me, but a quarter of the dollars in existence were printed then during COVID. And what are we seeing? Of course, inflation went through the roof. Everything is 25 to 50% more expensive. And so if we keep doing that, the next crisis is only going to be bigger. I'm calling out Larry Lepard here in the big print. Like the next time we do this, it's going to have to be more than $5 trillion. And what's that going to do to the price of goods? And incomes don't keep up.
Right.
So we're at a point now where there's not a lot of options, but they don't know another playbook. Like, what else are you going to do? Well, we could reduce spending. Not going to happen. Most of the money is all mandatory spending, like Medicare, Medicaid, Social Security. So we can't do that. We could default on our debt, right? That's not going to happen, right? Either. The whole world would implode basically. So what's the easiest thing to do? Just keep printing. Just try to print a little bit at a time and manage each crisis as they come. And I think we're boxed ourselves in to where we don't have a lot of options. So people have to take it upon themselves to opt out themselves and say, okay, well, I'm going to get assets. I'm going to put I've chosen to put my money in Bitcoin and Bitcoin adjacent equities. So I have to protect my own family.
Right. I mean, it looks like finally now we do have an alternative, and Michael Saylor would tell you it's called Plan B, and that's putting your money into harder assets like Bitcoin, gold, silver. We're already seeing that. So, hopefully with this option, we're only 16, 17 years in. The future will look a little brighter than maybe it did, in previous years, but we'll see how this all wraps up. You're not going to fundamentally change hundreds of years of monetary policy in the United States overnight. It's a process, as you and I know, and Bitcoin is just getting started. We, on the other hand, Mr. Lee, are just getting finished with our time today. But as always, I want to thank you so much for coming in. We love having you, and we love that you share your insights and expertise with us. It's always an absolute pleasure. Before we let you go, I'm sure you got at least a couple new fans out there from our audience today. So for those out there who are looking to learn more about Mr. Lee, what he does, what he talks about, what's the best place I can send them where they can get more info on what you're up to?
Yeah, come look me up on X, at Lee Winbush, and would love to mix it up with you and chat.
Amazing. Well, Mr. Lee, we would love to have you, and we certainly will be having you on more this year. It's always an absolute blast. Thanks so much for shooting the proverbial SHIT with us here at RoxomTV News, and we're excited to have you back more in 2026. I think it's going to be a good one, so I'm excited to be in it with you.
Glad to be here, Hank. Thanks.
Pleasure is ours. Thank you. All right, gang. Well, that is a wrap for today's Monday edition here at Roxom TV News. We'll be back tomorrow and the rest of the week at our normal time of 8 a.m. Pacific time to 10 a.m. Pacific time. So make sure you're tuning in. If you weren't already planning to do so, we'll be on then. And also, if you haven't already, make sure to like, follow, and subscribe to Roxom TV News, Roxom TV, and me at Hank at Roxom TV on whatever platform you choose to do your doom scrolling on. And we'll be back the rest of the week bringing you more of the day's top stories and biggest news. So as always, thank you all for tuning in. I'm Hank Hudson, and I will see all of you tomorrow. Enjoy your Monday, everyone.